Options are always a thing that people have, it's been more and more popular throughout the years, especially since 2020. And now people are learning how to kind of use call spreads, debit spreads, put spreads, all that good stuff. Tell us what you got in terms of the more complex options that we can go ahead and utilize.
All right, thank you, Sinead. So we're going to be talking about complex options today, and we're going to be reviewing our existing functionality and talking about some updates we've made in the upcoming versions of Zero Pro 648 and above, which should be released in about 2 weeks. So everything you're seeing here today, if you have any questions, feel free to get in touch with your BD representatives, and they can always get back to you regarding complex options. And right at the end, Dan is going to take us through how you can actually get access to complex options and be approved to trade level 3 options themselves. We're going to be keeping this at a very high level today. The webinar is only really meant to be an hour. We've got 15 minutes left, not a massive amount of time, but we're going to try and get through the high level stuff. Any questions, feel free to go ahead and put them in the chat. Multi-leg options. Before we review this, let's take a slight step back and let's look at level 2 options. Level 2 options are what the majority of users at TradeZero are currently trading if they are choosing to trade options. And that can include long calls, long puts, covered calls, and also cash secured puts as well. So that's where you go long on calls or puts, or you go short on a call with a stock portion to your spread, and cash puts, of course, where you put up cash collateral against shorting a put. So you have those strategies available to you already. So single leg, it does count as a strategy, even though it's not a spread and it's only really one leg. Let's talk multi-legs. If you would like to trade multiple legs within one spread, within one order at the same time, Zero Pro now allows you to do that in the existing Zero Pro 647 in production. And we're going to show you some new functionality in 648, but at this point in time, you can go into 647 and trade multi-leg options if you are approved for level 3 options trading. Dan will show us how to be approved for level 3 right at the end of this presentation. But just to cover some key functionality within multi-leg options Zero Pro, here's the options chain we all know and love. The strategy selection, you can select between your single legs, your verticals, butterflies, condors, and then the iron variants of those strategies. So the iron butterfly, the iron condor, the straddle, the strangle, right? We're going to talk about setting up a strangle and then also an iron condor later on in a demo. You have the options chain. Again, I'm sure you'll all be very familiar with it. You can select the columns you'd like to view, the number of strikes you'd like to see, and customize your order ticket to essentially be the trade that you would like to send off multi-leg wise. Leg configuration, you can customize the strike, the expiration, the quantity, and side. Of course, it is worth mentioning today that you won't be able to necessarily create custom spreads. You will be able to modify the width, the strikes, the sides of individual legs off your strategies. For example, iron butterflies, iron condors, but they would have to keep the same structure in terms of still being an iron butterfly or still being an iron condor. Level 2 and level 3. So we're going to cover level 2 options in a second. Focus of this is level 3 options multi. Let's take a look at this real quick. So this is new functionality coming in Zero Pro 648 very soon in a couple of weeks. This won't be available to you right now, so don't rush off trying to test it out, but this will be coming very soon. And it essentially is a tool that allows you to see your P&L analysis over time, taking into account the price of the underlying may fluctuate as time goes on. Essentially, it's an interactive risk graph. It shows you your max loss, your max profit, your profit chance, where your break-even points are, and your net debit or net credit, depending if you're selling or buying the spread. It shows you your Greeks, your time curve projections, so you can essentially project where your P&L would be dependent on the underlying price over the course of time towards the expiration of that spread. So let's go ahead and jump into a live demo. I've got Zero Pro 648 loaded up. I've got a nice little chart. In the middle, I've got my options chain with a new options strike slider below the chain, which I'll show you in just a second. And on the right, we've got the new options analysis P&L graph, also known as the risk graph. Currently loaded in, I've got a long call. If we just look at the chain, I've loaded up AMD. We are currently looking at a call on the 215 strike, and we are buying the call. It's a long call. And if you look on the right on the chart, you can see here the risk graph is extremely clear in what it's saying to us, right? Now, I know it's a little daunting looking at this thing for the first time. You're going to have to learn it sooner or later. This is how it works. And I'm going to explain each data point to you. And when we put them all together, it should make sense. Right here in the yellow line, which you can see vertically, this is your current price of your underlying. If you look at the price of AMD on a chart, you can see It's currently sitting at around 214.90. So 214.90. That's right. That's that right there. Right here, you see I have the 215 strike. It's in green, a little green circle, because we are buying the call. I want you to notice how, as the x-axis, the price of the underlying increases, our profit also increases. You see that? It's a call. And we all understand single leg calls. So as the price of your underlying increases with a call, in theory, as long as the Greeks aren't playing games with you, your contract price premium will also increase and you should be able to sell out for a profit. Right now, the debit on this would be $84. If the price of the underlying, so AMD, were to increase from what it is right now, which is $214, if it were to increase $4 to $218, if you look at my chart here, the profit on that, on my position of one contract on the 215 call, would be $216, around about there. That's how you would use this when it comes to estimating your profit based on the movement of the underlying. Now, it's not just about profit, it's about understanding your risk. And that's where the loss side of things comes in. You can see here there's a maximum loss of $82, which means even though the potential profit or max profit is unlimited, given that this is a call and the only thing really in the way is the expiry of the call, and it would need to, it's never really unlimited because the call will expire. If the price were to increase to $300 for AMD in the next 24 hours, given that or 6 hours, given that this is not even 6 hours, 3 hours, given that this is a 0DTE call option, you would be up $8,000. The profits are unlimited on this. The downside is what's more important here. Right now, we have a maximum loss of $100. Now, this does change with the Greeks, with IV, with all the various things that are moving for AMD. So the downside is now it's increasing as we're talking. So $113 is your max loss if I were to take the position right now. The reason why it's $116 is because the premium you pay is $116 for the contract. And you see here how we have a nice gradient down, straight line down, until we reach this level here with a 215 strike, at which point it straightens out and goes through a horizontal line across, and that's our 115 loss, max loss. I mean, it's worth noting that when you're reading these graphs, whenever you see a change in the angle of the line like that, it's a really good way to tell you have a strike there, right? In a moment, when we get to a more complex graph, you'll see why noticing these changes in angles is important to knowing where your strikes are. So that's the single leg. Let's now take a look at selling a strangle. So this is a more complex risk graph. Now, let's look at all the various points in this. So we have two legs. It's a short put and a short call. It's a short strangle overall. When you put those two together, you get a short strangle. We're selling the spread and we're receiving a premium or a credit of $86. Let's look at our various values. Our max loss here is $127. Well, sorry, no, to correct myself. The max loss is unlimited. Short strangles, your max loss is unlimited. Your max profit is capped. So the max profit in this case is $94. The max loss, unlimited, because you're selling the call and you're selling the put. Now, in this case, what we're looking for the price of the underlying to do is stay between the range of our break even. So our break even in this case is 214 in terms of the underlying price, the lower band, and the upper band is 218. If the price of AMD, the underlying, leaves and goes below the 214 break even, the lower band, we're now in loss. And that's an unlimited potential loss that you'd need to exit before it gets too bad. If the price of the underlying goes above 218, over here, you see, again, similar story, unlimited loss. If the price of the underlying stays between the two break-even points at the time of expiry, you're in profit. Now it's a question of how much profit. The maximum profit you can make is if price of the underlying stays between your two strikes, which is 215 and 217.50. If we stay in this $2.50 range, which we're currently at the bottom of right now, we will achieve max profit, which is $97. As we fall towards one of those break-even points, you can see here, the profit that we collect would be lower, so down to zero. Same on the higher side. So before we move on, Because the potential loss here is so high, what can we do to mitigate that loss? What we can do is we can add 2 more legs. And this is where multi-leg strategies really come into their own. You can go ahead and add 2 more legs to make this into an iron condor. If you add a long call and a long put, this is what you get, an iron condor. So you can see here now we have a defined max loss and a defined max profit. It's not just a defined max profit anymore where you have unlimited losses. We've added these 2 outer wings. They're called the wings. 212.50 on the low side and 220 on the high side. What I'm going to do now is I'm going to go ahead and switch the expiries to be a date that's a little further out. We're going to go April 10th. And just like that, we now have a max loss of $70 and a max profit of $180. Remember, we're selling the spread, which means we collect the premium on this spread. And as long as it stays between the bounds of the break even points, that's for us to keep. Ideally, it would stay between 215 in terms of the underlying and 217.50. It's a very tight spread. Let me show you the same information on a chart. Let me just make this a little bigger for you guys so that you can see this all. We're going to switch to the 15-minute here. Cool. This is the AMD chart, the underlying chart for this spread. Plotted on the chart are a few lines. I know it's a little difficult to read, but what I'll do is I'll just unlock this for you so we can zoom in here. This is the 5-minute chart. I've got a few lines on my chart here. I'm going to explain each one. The green lines, top and bottom, are the outer wings. That's the 212.50 and the 220. There you go, 212.50, 220. If we fall below or above one of these lines, we are at max loss, which is a $60 loss. Now, if we fall between the break-even points, which is the blue lines, 219.40 and 213.10, 15, and the green lines, that's still a loss. But you see here, look at the graph. It's telling us exactly what loss we'll be at, dependent on the price. So we can understand before we take the trade where we'll be, depending on where the stock goes. So in this case, if the stock moved down towards 112.50, we'd end up towards $70 max loss, going through $30 to $50 to $70. Now, the more important part of this, we have the 2 middle legs here, 217.50 and 215. If we manage to have the price of the underlying stay between these 2 strikes at the time of expiry, we'll end up collecting the maximum profit in terms of the maximum premium. So you see here, 190 is the current max profit, and we'd collect that full amount as long as the price at the time of expiry is between those 2 strikes. That is the long and short of trading multi-legs or setting up your multi-legs so that you can go ahead and understand the projection of P&L over the course of the next however many days until expiry. So let me go ahead and send a multi-leg order now for you guys. I quite like this trade. If I switch the expiry on the chart, you'll see here I've taken 4 legs. What I could do is I could expand the width of the 2 wings. Now I've increased our max profit to $375, and I have also increased the max loss. But if you look at the profit chance over here, I'm going to switch it back to what it was before. I've increased the profit chance by widening the wings. So right now it's 0.6%. I'm going to widen my wings, and just like that, it's 23.4. If I want to further widen my profit chance, what I can do is I can try and increase the max profit zone. Now, by increasing the max profit zone, I will decrease the max profit itself, but it could still be worth it. So let's try it. I've increased the max profit zone to be $2.50 to now $7.50 in terms of dollar amount between the max profit low and the max profit high. So 212.50 to 220. And what I can do now is I can say to myself, fine, I'm collecting less premium on this. In fact, I'm collecting half the premium I was collecting when I had the strikes quite close together. But the profit chance of it ending up between these 2 strikes is a lot higher because it doesn't have to move as much. A nice little leg setup there. So now I'm going to go ahead and send the order like so. Here we go. Confirmation window, send order. And instead, let me go for a market order like this. There we go. Market order executed. Now, of course, it was a market order, so I did get a little slippage there, and it executed at the market. And so I'm slightly down. Of course, not best practice. I'm doing this just for the webinar. If you switch over to your paired open positions tab, you can see that I now have a spread, AMD, iron condor, and it shows you your 4 legs. If I expand this, you'll see that I have a number of legs here, 4 legs, and it shows your put, call, your long, short, long, and it reflects the same exact thing entered into our order ticket over here. Now, of course, you can go in and look at all your values, your portfolio values, etc. But we won't do that right now. What we'll do is let's pretend that we have had the spread open for a few hours. We've been trading other things. So, for example, I'm trading SPY. I'm somewhere else now, right? And now all of a sudden, I'd like to close the spread. All right. How do I close the spread in an emergency? All I do, I click AMD Iron Condor. What it does, it loads it into the ticket for me. I hit buy. I send the order now. Send order. Oh, oops, my bad. I was long on the Iron Condor. That's my bad. So let me go ahead now and just close all these out. Double click it. Send order. Send. I've just closed that first spread out. Let me just close this other spread out that I accidentally opened. I've closed those 2 spreads out. Now I'm going to also close this out over here. And I'm going to press send order. And there we go. That closes that spread out. So by double clicking the spread in the paired open positions tab, it will essentially open up a window with the closing trade ready to send, and you can simply go ahead and send it. All right. So we are up on time. I'm going to go ahead and leave it there, but we will definitely have a more in-depth options analysis type webinar very, very soon. But Zunaid, back to you.
Awesome. And then for complex options, which multi-leg strategies can people use in Zero Pro today?
Mark? Yeah, so there's various multi-leg strategies available. Iron condors, which we demonstrated today, condors, which we have here, which is the non-iron variant. Iron butterflies, you have butterflies. We have the vertical, which is a favorite of a lot of people. We have the long strangle, we have the long straddle, and then we also have some additional strategies where you have an equity leg as well.
And then as Jeff went ahead and pointed out, there's a lot of capabilities that Zero Pro has at the moment. A lot of those capabilities are also going to TZ1, which personally is what I love, especially when I'm traveling. That is not my decor in the background. So it's always great to be able to use those things. But before we go ahead and end things, Dan, final thoughts before we kind of go ahead and wrap this up.
I think it's important that, first of all, we want to thank everyone for coming today. And we're going to be doing a lot more of these. And I think that Mark kind of touched on it, especially as it relates to options. We've spent hours just talking through options, various strategies, what they mean, when to use them, what the risks are, what the profit potential is. And so as we roll out new features on the platforms, like the new version of Zero Pro 648, the update to TZ1 to include multi-leg options trading, we really want to stay ahead of the education on those features. So expect to hear from us again in the near future, and hope all you guys are able to make it.
I didn't give you a chance to talk about how you can get access to the option.
Yes.
So if you could give us that, that'd be great.
So this is a screenshot of the client portal. When you log into the portal, you want to click on the account section, followed by the options application. And then right from there, you can request access to level 3. And there'll be some questions that you need to talking about your experience and what your risk tolerance is, etc. And then once that's submitted, an options principal will take a look at that and get you approved if suitable. So it's a pretty easy process.
Appreciate you guys for joining us. If you already have access to TradeZero, you're trying to figure out how to do different things, go ahead and email your reps. If you're not currently a member of TradeZero, depending on what country you live in, there's some opportunities there to welcome bonuses and all that good stuff as well. Like Dan said, there's a lot more educational content coming in terms of what TradeZero has to offer, but also what trading patterns and different things can look like. So we will have more webinars in terms of how to trade double bottoms, double tops. So be on the lookout for all that good stuff. And we appreciate your time. And Mark, Dan, thank you so much for your time. I appreciate it.
Cheers. Thanks, everyone.